I just met a couple who was donating $20,000 to charity, and they weren't getting any tax deductions at all from those charitable gifts. Here's what I told them so you can make use of this idea of bunching your charitable deductions. When you're trying to max out the tax deductions on your charitable giving, the first thing to understand is just the difference between standard and itemized deductions. Here's how standard deductions work. When you're a couple, the standard deductions are $30,000 per year as a couple, $15,000 when you're single. Now for this couple, and when you're looking at your itemized deductions, you only get the ability to itemize your deductions if you have more deductions than this number. With that state and local income tax maxing out at $10,000, if you hit that level and then start coming in with charitable deductions, you're giving money to charity and want to itemize those deductions, relatively speaking, if you don't have any mortgage interest perhaps, this is a couple hitting retirement, they had no mortgage interest, then the difference, you have to have more than $20,000 of other deductions before you start coming in and getting to itemize their deductions. It's amazing they're giving $20,000 to charity. It's great whatever you're giving to charity. But unless you are getting above that level, you aren't getting any tax benefit at all. So here's what I told them. They're giving $20,000 to charity. Every single year, they're giving $20,000 to charity. So the math for them giving money to charity and their deductions is $10,000 on that state and local income taxes, $20,000 to charity. That equals $30,000. That's the same number as the standard deduction. They're not getting any benefit. They don't have this ability to do an itemized deduction. But what if they bunch together their charitable deductions? What if instead of giving 1 year to charity $20,000, what if they give away $40,000 in 1 year? $40,000 in 1 year, perhaps they do give it all straight to charity. Perhaps they make use of something called a donor advised fund. But if they could push together, if they could bunch their charitable deductions into 1 year, $10,000 plus $40,000 to charity is now $50,000. They get to use the itemized deductions. They get those itemized deductions the next year when they come across with $10,000 in their property taxes, state and local taxes, and $0 to charity. In the world of standard and itemized deductions, $10,000 plus 0 does not equal $10,000. It equals $30,000 because that's what you get with the standard deduction. So instead of having $30,000 1 year, $30,000 next year, $60,000 of total deductions, you got $50,000 in the first year because you bunched together your charitable deductions, $30,000 the next year because you get your standard deductions. That's $80,000 of total deductions in that 2-year period. $20,000 more of deductions. That $20,000 more for them at the 22% tax rate, that's $4,400 extra that you got to take and save on your taxes because you took the time to plan out your charity ahead of time. You took the time to bunch together your deductions. Instead of doing the same thing every single year, you planned it out. You went over in 1 year, bunching it together, having not much at all of any deductions the next year. You came out ahead by $4,400. Take a look at bunching your charitable deductions if you're somebody that's giving money to charity every year. Hi, I'm Jeremy Keil, owner of Keil Financial Partners. And if you're interested in seeing how we help our clients get more income, pay less in taxes, and avoid big retirement mistakes, make sure to go to keilfp.com. That's KEILFP.com.